Good morning and welcome back to the Sydney Tokyo overlap for 9th and 10th of April. 9th for those who are joining from the western side of the world. It is 8 p.m. now over there, 8 p.m. Eastern, and 10th of April for those who are joining from the Asian side or eastern side of the world. It is early morning across 5 a.m. or 7 a.m. according to the country zone. So once again, let's get started off with the day with the Euro USD. Let me bring up the daily chart first. All right, what Euro is doing is nothing different than what was expected out of it. Prices raised through 1.107080 almost, and yeah, 11 almost 92 yesterday or just in the previous sessions, couple of sessions. What it's doing on the larger degree is let's look at that first. The five-wave rally, which was completed in July 23, was followed by a three-wave corrective decline of a similar degree. And now what we are seeing is another five-wave movement, which is a classic example of the Elliott wave principle. Five up followed by three down is usually followed by another five waves up. So ideally, what Euro is doing right now is it's already midway, but it's wanting to push above that high, the swing high, terminating previous five waves rally. Then the price action is around 1.1258. All right. So the minimum push or technical minimum push required is above 1.1258, and it's not necessary that it's going to stop there. If you look at the Fibonacci ratios or the Elliott channel, which I've drawn here, connecting now this five waves could be a larger degree wave, a larger degree corrective A, that is bracket A, bracket B, that is intermediate in terms of the degree, and we are now pushing ahead towards the bracket C, and the Fibonacci ratios ideally it's a symmetric pattern ABC where C is at equal to A normal cases, but it can really go through the Fibonacci extensions. That this is a simple Fibonacci extension which I have shown here, and also matching up with the Elliott channel. So the price action that we can expect is around 1.19. Okay, so that's the bigger picture. Let's go back to the 4-hour chart, please. What we are seeing right now on the 4-hour time frame is just a minute scale version of what we just saw on the daily chart. It's emphasizing on the price action post larger degree or post the corrective drop which completed on 12th of Jan. All right. Now I'm just trying to adjust the waves print here so that we can see. Okay. So as prices rallied all the way towards 1.1109, 1.110, yeah, almost 1.11. I mean, it was just close to taking out the previous high by a few points. Remember us discussing, if possible, take profits for short-term traders and positional traders continue holding long positions, right? Now that was told keeping in mind the possibility of a wave for orange, which is minute degree, unfolding as a triangle structure. And now it looks like we are in the third wave of the particular triangle structure we were referring to in the last couple of sessions. We've got wave A. I can bring up the hourly chart, but before that, let's discuss the larger degree counts here. One larger degree count suggests that minute wave 1, 2 are complete and we are progressing in an extended minute wave 3, which is shown here by the orange arrows. And within minute wave 3, we are now unfolding minute wave 4 as a triangle structure which still has potential two more waves to go. I tell you what, those who have booked profits last session, prices are right there and right as we speak around the 950 zone, which we were talking. Yes, I think I emphatically remember, precisely remember last session where we were discussing a potential buy around the 950 zone. Or even close to 900. So prices are right there as we speak, potentially wave C of the triangle being complete. All right, so please go ahead and hit the buy button if you have booked short-term partial profits or complete profits. And okay, the stop loss would remain the same level, 1.05, and the targets are already there, pointing at 1.1475 and possibly even higher, but not before a decline or not before a corrective decline. So we can target 1.1475. All right, so that's the story on the 4-hour chart. And for those who are really interested in watching the price action unfold right now, it's a beautiful potential triangle structure which is working upon right now. And see, we were talking about the possibility here. So let's now connect the dots. Okay, we've got three waves. At least we need three waves before we can conclude a potential triangle in the making. So if that is wave A and ABC wave B, another ABC wave C in the making, so we can actually connect the dots between AC and we can extend it a bit further. So if wave D and E are progressing, they will ideally, now we don't know where D is going to be, but I'm just trying to do a symmetric wave like that of the same angle as AC, and we have ideally if it is an ABC now, then there will be a push higher towards D and E a bit lower. Maybe wave E can come and test the trend line here, not the trend line exactly, but the triangle consolidation line. And we can also trust on the angle between that the prices would come and test D over there. All right, so this is what the structure looks like. We are around 10th of April now, moving towards the last two trading days of the week. So there is still a possibility of a sideways movement. That's what the charts are indicating. We cannot expect breakout, or we rather should not expect breakout, at least for now, unless the alternate count is uh, the fourth wave terminated here, all right, as a running flat possibly, which or we can say as a flat or a WXY, all right, where we will shift wave 4 here, and then we've got a wave 1 and wave 2. So if it is wave 1 and wave 2, even then we are supposed to buy this. If it's a triangle, we are supposed to buy this. But the only difference is if it is the third wave in the making, then it's going to break that particular line, also break 1.1111 and push higher right from this level. All right, so any of the outcome, whether it is wave D of the triangle or wave 3 within the fifth wave of the minute A structure, we are looking ahead on the north side, please. In a very subtle manner, it's good to remain on the long side. It's also good to add further on the long positions. All right, so that's the story in the euro as we described the daily 4 hours and the hourly chart setups. Neat little triangle structure on the lower time frames, and it looks sideways on the 4 hour and the daily chart, which is absolutely okay. All right, so please be on the long side, the potential target of 1.15 and stop loss at 1.05. That's for euro USD. Now let's bring up the dollar index. One thing I'd like to emphasize in the dollar index before we start discussing is that there are different various providers for the dollar index if you are inclined to trade that, and the stop loss may vary according to the providers, but the overall structure of the trend will remain the same. Okay, so the only thing we need to adjust, this is the 8 cap chart for the dollar index. If you are following any other provider, then the only thing that you need to adjust with is the stop losses and the potential targets projected here. Now that's the first chart, daily chart flashing on your screens for the dollar index right now. And what we are seeing is, uh, okay, first things first, a minor degree 5 wave completed on around July 23, which was followed nicely by a flat ABC corrective structure, which is according to the wave principle. And since the 13th of January, what we are now seeing is again a beautiful story unfolding right as per the wave principle, which is which should be ideally 5 waves lower, and within the 5 wave lower, it is expanding or it is extending wave 3 as we speak. Believe it or not, wave 3 is still within its last waves, expected to go and terminate below 93 before wave 4 occurs or pulls back, and wave 5 extends lower further. All right, that's the overall picture on the daily chart. So keeping the bigger picture in mind, prices should ideally go and drop below 99, and it's not just that is a technical perspective that we should see a print below 99. The Fibonacci perspective and the channel line perspective is indicating dollar index dropping all the way towards potentially 96 and 95 levels. All right, so that was the daily chart story. What we bring up is the 4 hour, emphasize with the wave counts precisely since the 12th of January. Now, the degree might be different. We keep ourselves open with the minor degree which is being unfolded right now. But just for the sake of putting it in perspective, we are starting with a minute degree. So what we see right now is a minute wave 1 complete, followed by minute wave 2 complete, and we are now witnessing an extended minute wave 3 version, which is in its last wave, or possibly second last wave, as wave 4 minute A is unfolding as a triangle. Once it completes as a triangle, we can then further see a drop towards 98.25. 98.25 would be minute wave 3, and again a corrective minute wave 4 and 5. Now see this beauty of wave 4 orange and wave 2 orange. Last couple of sessions we have been discussing the possibility of uh, a guideline where if the second wave is sharp, which in this case it was, even in the previous case it was, wave 4 ideally goes a bit sideways. And we were also discussing the possibility of booking short-term profits, and getting another chance to do so on the short side is again popping up nicely. Prices have rallied back towards 102.82, very close to 103. It's another opportunity if you booked your profits short-term or partial in the past sessions. It's time to hit the sell button potential right now as we speak, with a stop at 107 as we discussed earlier. Now that is a potential wave C of the triangle structure before it digs sideways a couple of more waves and then resumes its journey towards 98.25 lower. Alright, and then wave 4 and wave 5 higher. Alright, wave 4 higher and wave 5 lower, sorry. So that's the 4-hour description. At the medium term, we can also quickly view what is going on the hourly chart. That's a beautiful structure which is being carved out. Now each story is unfolding in its own perspective, and the hourly chart is right now flashing up on your screens with a potential triangle structure. As we did in the euro, we can connect the dots here. If that is wave A, wave B, and wave C, what we can do is connect the dots of A and C and extend it a bit further on the right hand side, and presuming that wave D, presuming that it could be a symmetric triangle, doing the same. We don't have wave D here, but if it is correctly done and if it's correctly imagined, then we will see wave D and E unfolding like that. Before now I can just adjust this wave from that point to this point. All right, and then we can expect prices to push lower, or drag lower back towards the 98.25. Right, so that's a little triangle structure which could be unfolding right now. All right, so whether it is triangle wave C right now unfolding, or it is wave 1 or 2, either ways we are good to remain on the short side. Okay, so the dollar index in a subtle manner remains absolutely in control of bears, and it's good to hit the sell button again if you haven't yet done so. All right. And that's the story in the dollar index. Let's move on to pound. We will discuss 4-hour charts in pound. The daily chart is reflecting, or would be reflecting, the same structure. Again, what pound is doing is also not exactly as a triangle that we discussed in the euro or the dollar index right now, but it's completed its wave for potentially. Now, to just give you an idea about the the wave degree, it's minute wave 1, 2, 3, and potential 4 complete as we speak. That was a couple of days back, where we can expect wave 4 already completed, and now minute wave 5 is unfolding, and we have already recommended hitting the buy button last session, again around 1.2750 mark. Potential stop loss goes just below that minute wave 1, below 1.25, and the potential targets are flashing around 1.35 up there. It's not going to stop there, possibly. It's going to go even further, but minimum 1.34 is what we can expect. Alright, so what it's doing right now is possibly, if we go back on an hourly chart, it could be potential lower degree waves, 1s and 2s already in place. And the third wave is looking to inch higher. Alright, but as an alternate, if we still believe or if we still want to say that this wave 4 is still unfolding, which doesn't look like, it cannot be two patterns simultaneously occurring, but it is 5 waves down, 1, 2, 3, 4, 5. That's the only thing which is keeping me, or keeping, it's good to keep our options open before. So if it's the first 5 waves, then it's going to be another 5 waves lower as a diagonal at least. So or the impulse, we might see a print below 2709. It could be a minor drop, but there could be a drop if it's the first 5 waves of the corrective wave 4 pattern. And if it's an expanded flat already complete, then we are good to see that wave 4 is done, and maybe we are looking higher towards wave 3 now. If it certainly pushes above the 2864 from here, then we are more likely that the fifth wave is progressing already. All in all, it remains in a bullish territory found with a stop loss around 1.25 and a potential target of 1.35 going forward. All right. So those are the stories for all three currencies. We can now shift our focus on gold, which again is hovering as a potential wave B of a 335 structure. But before we discuss, or before we begin discussing what is happening on a 4-hour chart, maybe let me bring up the daily story once again. The daily chart is indicating clearly that we might have just completed. It's a word might have completed, which we have like to use. Wave 5 at 4 different degrees. That is bracket wave 5, which is intermediate wave 5, uh, normal wave 5, which is minor wave 5, and then the circle Roman wave 5, which is minute wave 5, and on the 4-hour chart it would be a minute A wave 5 as well. So wave 5 completed at 4, potentially completed at 4 different degrees, just ahead of the target around 3280 or 3270. And it is also possible that it's not the fifth wave, but it's actually the third wave which completed. Maybe we might have to push this third wave circle up there, and but it's too early to do that. Right now we'll go with the flow of potential 5 wave could be complete. All right, that's the daily chart. Now if it is completed, then gold is heading lower in a much serious way, and it can go much lower levels. At minute intermediate wave 4 is also possible, but predicting that intermediate wave 4 is just something that we want to discuss, but we will go step by step. Now the first step which we really think should unfold is prices dropping towards 2840, and gradually, if we are correctly done, then the next in medium term target would be 2500. We keep these two targets in mind, and for this to happen, prices should stay below 3160, all the time. Right now what we are seeing is now if those 5 waves just completed, maybe I'll just have to adjust the waves here. Just the counts, they're overlapping, so I'm going to push this black uh, wave 5 circle a bit higher. Maybe there are ways to see that if that the first impulse just got complete, and it did complete, then it would be a 5 wave down. All right, there you see wave 1, 2, wave 2 was a flat, 3, 4, wave 4 was a sharp, and again wave 5 of the same intensity. Wave 1, that's okay. If the 5 wave structure is complete, then it's a neat little corrective wave that we are now seeing, which has almost reached the 61.8% of the first wave. So it's looking good as wave 1 and wave 2 perspective, and it's also an excellent opportunity to go short as we speak. Prices are trading around 30.91, which is again an excellent place to go short with a stop loss around 31.70 or higher. But 31.70 is good enough, and if that what we are seeing is correct, then the next move should be sharply lower back towards the 28.30. Alright, so now we are inclined on the short side. We can hit the sell button again as we speak around the 30.91, and a quick way to unfold, a quick way to know what is happening is just a story on the hourly chart. So once again, if you look at the wave structure, if it is 1 flat, wave 2 uh, wave 3 sharp, wave 4, or wave 4 unfolded as a triangle, A, B, C, D, and E, and then a last wave lower. If that is the fifth wave, and we've got the impulse followed by a corrective rally, which is absolutely fine. Uh, in short, until prices stay below 31.69, we would like to go with the possibility of the a much deeper corrective wave unfolding. All right. So ideally remain on the short side with the stop loss about 31.70, the potential target around 28.30 or so. All right. So those are the four stories where we literally got trading interest on. Except for pound, we have issued short positions in the portal, euro, dollar index, and gold. Next time when we are back, London times and the New York sessions, we would touch base with the indices and Bitcoin. Bitcoin is again we are waiting for the counter trend to materialize. So let the price do what it is supposed to be done or supposed to do. Sorry, and we right now focus on the short positions in gold. All right, long in euro and short in the dollar index, long in pound. So those are the trade summaries for the session. We'll be again back in a few hours to touch base or continue the story in the London Times. All right, let's bring the current one to a pause, and as always, until the next one, once again, thank you for tuning in, and until the next one, as always, please do take care and God bless. Goodbye.